Yes.
War financing?
What do you want to know about war financing?
Just key points. Like what happened?
Uh-huh. War finance.
If it's
That's an interesting question. War finance, I'll take war finance. War finance is interesting. The story that Young tells is about how war finance transformed the American monetary system, meaning the Civil War in particular. And of course, I've told a story about how war finance transformed it again, World War I, so that this bank that was supposed to run on bills of exchange wound up running on T-bills instead. I'll make a different point about war finance, though, now, using this here. Essentially, in a war, what happens is that all of the needs, all of the normal trading needs, all the things that banks normally do, get subordinated to the needs of the state to raise money in order to pay for the war. Okay? And in a way, that's like a financial crisis. Okay, just as I said, there's mild, medium, huge. Okay, war is like a huge financial crisis, okay, where the government needs to buy a lot of stuff, but not pay for it. Okay, not pay for it with taxes, right? So it needs to say, I want to buy a lot of stuff, and I'm not going to settle with you. I'm not going to pay you in money. I'm going to pay you in bonds, or I need to roll this into the future. In fact, the distant future, the future after I win the war, basically. And maybe I'll win the war, maybe I won't. If I don't win the war, you're not going to get paid, okay? And so it's difficult to do. That's from a monetary point of view. From a banking point of view, you're rolling very large promises into the future. You're not paying for goods. You're just promising to pay for goods. The banking system can help, okay? The central banking system can help. And so it's just like this. In a huge crisis, liquidity crisis, that like we just saw, 2007, 2009, the Fed was ultimately forced to go and buy mortgage-backed securities, okay? In a war, the Fed is basically forced to go in and buy long government bonds, support the government bond market. That's what happened in World War I, that's what happened in World War II, that's what happened in the Civil War, okay? That the banking system assists war finance by by acting as a dealer in government securities, not just private securities, okay? So it's another deep question about war finance, okay? That what was so startling, I think, politically about what happened in 2007, 2009 is that the Fed used these mechanisms of war finance, you know, not for war, not for the debt of the sovereign, but for private debts, for mortgage-backed securities, for dealers. And this is a problem. You know, this is a political problem. It's like this is an enormously powerful instrument, war finance, okay, that is saved. It's so powerful that you save it for times when you really have to do it, okay? And I think the Fed did have to do it during this time, okay? This was a huge liquidity crisis. It tried first this, it tried that, it only came to this at the end, you know, doing this much. It really did not want to do that, okay? But so there's this analogy, deep analogy, between war finance and crisis finance, okay? In both cases, the banking system is helping solve the problem temporarily, where the problem is that a lot of payments cannot be made. Okay, in war finance, it's the sovereign who can't make the payments. In a liquidity crisis, it's the private sector that can't make the payments. But otherwise, the banking system problem, the banking problem, is the same. So that's another deep question, as a matter of fact, masquerading as a simple question.